Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new day, and as we head into the Republic Day weekend, the cues are looking fairly mixed. Of course, we managed to stage a good rebound yesterday, but today is monthly F&O expiry, and we'll have to see whether or not the gains sustain. Because if you look at the GIFT Nifty, giving out muted signals, but looks like we are in for a negative open this morning, and Wall Street also had a fairly mixed close yesterday. But of course, lots of stocks in focus, results, reactions, as well as results to watch out for. We'll be talking about a whole host of stocks. We'll also be taking up all your stock-related queries. So if you have any queries, keep them coming in on our YouTube feed. We'll try and take them up. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street ends mixed, even as S&P 500 hits a fresh record. In fact, Asian markets are also trading mixed, with the GIFT Nifty indicating a lower start for the Indian market. Crude prices rise, with the Brent hovering above that $80 a barrel mark. In fact, production in the United States has fallen by about 1 million barrels a day, which is what is keeping prices elevated. Z moves the NCLT against Sony, asks the Japanese media giant to withdraw termination and implement the merger. Bajaj Auto and TVS Motor deliver strong earnings in the third quarter. Tata Steel, meanwhile, swings to profit in the quarter gone by, while Tech Mahindra's revenue growth also beats street expectations. And among key earnings to watch out for today, ACC, JSW Steel and Vedanta are some of the numbers to look out for. Well, let me first then bring on board our technical expert for today. Joining me is Kunal Rambhia, who's the fund manager at the Streets. Great to have you on the show, Kunal. Yesterday, we did manage to stage a comeback after the kind of drubbing that we saw day before, right? But today, GIFT Nifty hinting at a muted start, and the 21-day EMA, which happens to be at 21,500. Would you expect that to be a major resistance zone in today's session today, or do you think that support levels of 21,300 could be tested? I mean, what do you feel? Where do we head from here when it comes to the F&O expiry?
Good morning. Thank you for having me on the show. And morning to all our viewers also. So if you look at the Nifty, yes, we saw a sizable correction of around 4.5%, and same goes with the Bank Nifty. That was a little harsh actually because of the HDFC Bank result and the post reaction of the same. But now if you look at the levels, we are back to the same level where we were almost a month back. It's been almost 28 days of journey. Nifty is back to the same level, and Bank Nifty made a bottom which was near to the 29 to 30 days bottom, which was again on the chart. So if you look at the trend, it's certainly intact. If you look at the support and resistance, then Nifty has a support of around 21,150 and the resistance of around 21,700. Now, these levels are something to watch out for before the new rally emerges. Similarly, on the Bank Nifty, we have a support of around 44,500 and the resistance of around 46,000. So until these two levels on the higher and the lower side are just not taken out, we can expect a range-bound movement going forward. But overall, the trend of the market is still very much intact. If you look at the short term, we already saw the correction. Now, if yesterday's bottom is taken care of, I think the sideways consolidation is likely on the cards.
All right, expect sideways consolidation. Hold that thought, Kunal. We'll talk about particular stocks as well, and we'll also be taking up viewer queries. But let me also bring on board Abhishek Gaoshinde, who's the Deputy VP Research at Sharekhan, joining in this morning to take stock of the auto numbers that have come in yesterday. Bajaj Auto, has beaten expectations on all counts, so to say, profit, margin, in fact, even revenues. And in fact, the company has also noted that, they have seen double-digit, segment market share across cities when it comes to Triumph. So post the numbers, how would you really rate Bajaj Auto as a stock, given the fact that the stock has rallied quite a bit, right? So here on, do you still see limited room for re-rating? Do you think the re-rating has already happened on the stock?
Thank you. First of all, that we have been constructive on the overall two-wheeler sector, and we are more positive on the mass market players like Bajaj Auto and Hero MotoCorp compared to the established premium players. And this particular result has vindicated our investment thesis and the stance on the mass market player, given that in this quarter, the traditional high margin segments like exports and the three-wheeler mix was relatively weaker on a QoQ basis. Despite that, companies reported a strong EBITDA margin, about 20%, and this was the consecutive fifth quarter when the EBITDA margin has been above 19%. So there are two clear-cut inferences in this result. One, that the company has been sustaining higher EBITDA margin trajectory. Second, that despite that the weakness in its traditional high margin mix, despite that the company has been sustaining its EBITDA margin, which is indicating that its underlying domestic business has been reporting higher EBITDA margin than that of its traditional or historical margin trajectory. So it's quite positive, given that the export volumes have been bottomed out, and the company has been expanding its presence in the EV market. We believe that there is still room for company to sustain its EBITDA margin and deserves continued rating. Currently, the company is focusing on establishing itself as an iconic premium player, given that it has an established presence in the mass premium market segment. So broadly, we are continue to be positive on Bajaj Auto, and we maintain our buy rating on the stock.
All right, positive on Bajaj Auto, buy rating. But what about TVS? Record margins, volume growth has been strong, numbers ahead of estimates. Do you foresee any kind of risks here? Because, things are going pretty much smoothly for TVS Motor as well.
In TVS Motor also, the case is that this was the consecutive second quarter when it has reported a EBITDA margin above 11% and has been maintaining double-digit EBITDA margin trajectory for last 8 to 10 quarters. Here, the thing we should have to highlight that its EV business is also growing. That so despite increasing in the revenue contribution from the EV business, which is likely to be an EBITDA negative business, despite that its blended EBITDA margin has been improving. This is indicating that the blended EBITDA margin in the IC portfolio has been much better than that of the previous cycle, which is quite positive for TVS Motors. And the risk per se that both Bajaj Auto and the TVS Motors are facing risk in the export side. That although the their export volumes have been somehow bottomed out, but the export environment is still challenging.
Yes, of course, exports remain a risk for some of these two-wheeler makers. But of course, heading into the big event next week, we have the budget coming up. What would you be watching out for in terms of announcement, particularly for the auto industry from the FM? Abhishek, if you can shed some light on that.
On a broader note, that there is no major expectation from the automobile sector, but we are expecting some SOPs in the EV segment. The FAME 2 subsidy scheme is expected to be end by March 24. So we are expecting that FAME scheme would be extended, and beyond that, we expect that the government can expand the exposure of this FAME scheme. So largely, broader expectations are on the EV side only. Nothing much is on the on this IC side. Beyond that, anything which come out as a trigger for a rural economy or infrastructure investment side, that would be considered as a positive for traditional sectors like automobile sector.
All right, those are the expectations. But, before I let you go, we've now seen some of the numbers from the two-wheeler space, right? And four-wheelers are largely expected to report now. Going forward, do you think, two-wheelers are, on a better trajectory for future growth? Or do you think one should look at four-wheelers now? What would your picks in the four-wheeler space be right now?
In overall automobile sector, we say that we are quite optimistic on the two-wheeler sector. And as I said, that our pecking order is that Hero MotoCorp, Bajaj Auto, TVS Motor, and then Eicher Motors. And in the four-wheeler segment, we continue to like Tata Motors, given that all of its cylinders are firing simultaneously. And H2 FY24 is used, or second half of the financial year used to be better for JLR business. So considering that Tata Motor is our top pick in the overall segment, and in the two-wheeler segment, we like Hero MotoCorp, Bajaj Auto, and then TVS Motor and Eicher.
All right, so Hero tops the pecking order when it comes to the two-wheeler space, and Tata Motors is one stock that, of course, Abhishek is bullish on. With that, Abhishek, thanks a lot for taking our time and joining in and sharing your thoughts with us this morning.
Thank you.
With that, let's go back to Kunal and talk about specific stocks. Kunal, Tata Steel. This is one stock that has been focused yesterday, strong rally ahead of numbers. And if you look at the numbers, operationally strong quarter led by the India business. The company has swung to profits if you look at compared to the YY basis, on a YY basis rather. And, margins have also been pretty steady at 11.3%. As I mentioned, India business has, led to this strong performance, and Europe continues to see losses, right? But if you look at the charts, yesterday we saw a very strong run-up coming in. Do you expect a sell-on news rather kind of coming in today rather? Or do you think this up move will continue from here? Because Tata Steel in the metals pack, over the last 5 sessions or so, it has clocked in a decent 0.5% gain. But if you look at the 1 month chart, it hasn't really, been able to establish a trend, so to say. So here on, after the numbers, where do you see Tata Steel heading?
So, as you rightly said, yeah, it's been almost a month. In fact, the counter has not delivered much. But if you look at the support, the counter made an extreme bottom at around 128 just a couple of days back. In fact, day before yesterday was a good sell-off, and yesterday was again a surprise positive move. So considering this entire formation, I think this counter is poised for a new rally from the present level. Till the time it's not breaking 128. So, this is again one of my recommendations for the day. With the stop loss of 128 on the closing basis, one can certainly initiate a buy on this, and the target on this can be as high as 145. And if it manages to close above 145, I think 155 to 160 can also be on the cards. So until the 128 is taken out, I'll stay bullish on Tata Steel as of now.
All right, we had a couple of queries on this particular stock on our feed. I hope this answers your query. But what about a Z now, Kunal? Lots of drama unfolding, so to say. Now, Z has dragged Sony to NCLT. And, we have seen Z, come off quite a bit. But do you think that the bottom may be in place for Z now, and perhaps if traders are looking at this particular stock, one should in fact take positions every dip and, make use of the kind of volatility that's unfolding in the stock?
So, again, there is a very famous saying in technicals. We say, let's not catch the falling knife. But if you look at the historical data from August 2020 so far, this counter has made a bottom near 170 almost 4 times. This was the 5th time. Due to the lower circuits, the counter went down till 155, I guess. And again, it has reclaimed that level. Again, yesterday it was up by around 10% during the session and then closed at around 6.5%. The level turns out to be 166, so which is again 170 itself. So I'll just wait for a couple of days. I'll wait for the consolidation to happen near this level. If the counter manages to hold this 170 zone precisely for next 1 week or so, I think then more or less the bottom is already in place. One can think of accumulating. Now the question comes whether we can expect immediate bounce or not. So I would not really expect immediate bounce. But if there is a consolidation, I think the downside is then restricted. With the stop loss of 155, one can initiate a buy. But here, one will have to keep patience, and we'll have to wait for the momentum to emerge for the short-term traders.
All right. Vijay had a query on this particular stock. Hope that answers your query. Another stock that will be in focus today will be Laurus Labs. That's the brokerage call of the day, given the fact that we've seen sharp EPS cuts coming in after a poor performance, right? And performance, quarterly performance has been poor for this particular company for quite some time now. So if you look at Citi, it has a sell rating, target price at 315. It has cut FY24, FY26 EBITDA estimate by 9 to 11%. Jefferies also has an underperformed rating, target price cut to 250 rupees per share. Here, in fact, FY25, FY26 EPS estimates have been cut by 19 to 16%. These are the kind of EPS cuts coming in. So, Laurus Labs, if somebody is invested in this stock or, somebody holds this stock, would you advise them to book partial losses at least, or do you think it warrants a complete exit at this current juncture?
Right. So what we'll do is we'll just go back to the historical data again in the end of December. That's precisely on 22nd December. The counter went up by almost 4.5%. And immediately on the next day, which is 26th of December, counter gained further 5%. So this massive uptick of around 10% was seen on the counter. And then, of course, after that, we saw sideways negative consolidation. And yesterday, it closed near to 400. And now we are witnessing this negative announcement coming in. But if you look at the price action, the trend is still intact. Now, again, in today's session, post this negative announcement, the results, if the counter manages to close extreme negative, then I think, yes, one needs to have the exit on the counter. But if counter is able to manage 375 to 380 mark, and on the closing basis, of course, then yes, this can be absolutely taken care of. I think the price discounts everything. This entire month of underperformance was mainly because of the negative results which were getting discounted. So with the stop loss of 375, one can certainly hold on. Can we buy new position? Then the question mark will be whether the closing is above 375. So if manages to close above 375, certainly one can initiate a fresh buy also.
All right, that's the view on Aloris Labs. But, we have queries coming in on Tata Steel. We've already addressed that. Mohsin Rana wants to know about it. Mohsin, we've already addressed Tata Steel, but Naveen has a query on CET. Now, numbers are pretty strong and stock has been on a roll, so to say. Last 1 month, we've seen a 21% kind of an up move. Yesterday as well, it was upbeat. Do you see that, some of these tire stocks, or do you think they are now in the overbought zone, or do you think there is more scope for upside from here? What would you advise traders to do for this particular stock, CET, in the tire space?
So the recent trend of the market has been that the overbought counter keeps on going up itself. So, if you look at the volumes on the CET, it's really significant. The volumes are picking up. Even in fact, in yesterday's session also, we saw massive volumes getting generated near the high itself. So I think this momentum might just continue for now. So with the stop loss of 2750 to 750, I think one can hold on to the position. We can expect the targets of 3200 plus anytime soon. And once that level is achieved, again, I would advise our viewer to trail the stop loss and hold the position. This counter may just surprise on the upside.
Right, expect surprises on the upside. Ravi Shankar wants to know your thoughts on an Ashok Leyland. Now, this stock hasn't been able to fire up, right? If you look at the 6-month chart, monthly charts, weakness is all I see. I think Ravi Shankar wants to know your thoughts as to, what one should be watching out for in terms of immediate stop loss and target. What would you say?
So it's been almost 7 months. The counter is muted, but if you look at the trend is certainly positive. In 6 months, we have consistently seen the higher bottoms coming in place, but the momentum is certainly missing. So with the stop loss of 165, I think one can hold on to the position. There is no problem till the time it breaks 165. But managing to close below 165, I think one should take an exit. So for now, our viewer can hold on to the position, and on the bounce, say at around 180 to 185, one can think of exiting. This is a patient testing counter. So if the horizon is very short term or mid term, I think one should take an exit on the bounce.
All right, exit on bounce. That's the call. Hope that answers your query. But let's talk about the IT space. Tech Mahindra came out with numbers yesterday. Numbers are pretty good. It has, topped expectation in terms of dollar revenues as well. And the stock has, done well in tandem with other large cap IT names, right? So here on, do you expect a pop in today's session at least reacting to numbers? Or do you think yesterday, since it was upbeat, there could be some bit of profit taking here?
We have seen a positive trend in the entire IT segment, be it Infosys or TCS or Wipro or even TechM. So yes, TechM is also into a positive trend itself. It was kind of muting. The performance was not so promising the way the other IT companies were doing. So I think this momentum might just continue from here on also with the stop loss of 1350. One can certainly hold on to the position. I'm expecting the position. I'm expecting the target of around 1535 to 1550 on the target. So yeah, trail the stop loss, and every level when the price keeps on going up, keep trailing the stop loss. These positive trends might just continue in such kind of markets. So don't give up on the position just because there's a gap up open, and trail the stop loss is an advice to all our viewers.
What about an Infosys? We have a query coming in from Anant Upadhyay on Infosys from the IT pack. What are the immediate targets you'll be watching out for here?
Again, the same. If you look at the historical data, there was a massive gap down somewhere in April 2022, and now the counter has reached the same level. I think this gap will get filled anytime soon. So the near-term targets are 1725, and if the counter manages to close above that, I think 1825 is the level which I'm watching out from the positional point of view. So short-term target being 1725, positional target being 1825 is something to watch out for on Infosys. One has to maintain the stop loss, and that's around 1625. So if the counter manages to go below 1625, take a call again, but otherwise stay on the counter. It's extremely positive as of now.
All right, extremely positive. Infosys, hang on to it. That's the call. But what about an angel broking? We have a couple of queries. Jutru Pawan wants to know your thoughts. Angel One, this stock numbers weren't all that great, and it had reacted quite sharply to it when the numbers came out. I don't have the chart open here, but if you track Angel One, would you advise investors to look at this particular stock from the broking space, or do you think Motilal Oswal is one stock that is much better compared to an Angel One, given the kind of numbers it reported?
So certainly, yes, MOSL is the first preference. But if you look at Angel One, now this counter somewhere in the month of October was trading at around 1800, and from 1800, one-sided rally till around 3900 was seen. There was a linear rally on the weekly chart, not even a single week negative closing. So such kind of rallies will always see a sharp decline coming in. Right now, it's placed near to the support. So if someone is willing to create a new position on Angel One, one can certainly buy with the stop loss of 2800. Obviously, that's around 130 points away from the present level, but I think this momentum, which we saw in the recent past, might just continue again from the present level. So till the time the counter is not closing below 2800, one can think of holding the position, and one can add more. When it comes to MOSL, the rally was very slow, but yeah, it was decisive. So I think preferred counter for now will be MOSL, but from risk reward point of view, I think Angel One will also fine at the present levels.
All right, Engine One also looking good at present levels. Hope that answers your query. But let's talk about sugar stocks. KRK Rao wants to know your thoughts. Sugar stocks have been, fairly volatile. Obviously, reacting to any news flow or any kind of, government announcements that keep coming in. But do you think sugar warrants a look now? And if yes, which one would you prefer? Balrampur, Sri Renuka, or EID Parry? Any looking interesting on the charts at least?
See, again, this counter is more of political driven counter, and we know as we near the budget and this election, then always the MSP will create trouble for the companies going forward. So if you look at the trend is positive but muted kind of. If someone wants to really go ahead with sugar, I think Balrampur is the best pick as of now. Risk reward ratio is extremely favorable. Since last 6 to 7 months, we have seen the extreme bottom being 375, which is the support as of now. So until the counter manages to close below 370, that's 370, I think one can hold on to this. One can create a new position from risk reward point of view. And on the bounce, we can expect the target of around 420 to 425. But again, don't expect much because these counters have shown a massive rally between 2021-22 as of now seems to be out of favor for the market. Yeah, but if someone is holding the position with the stop loss of 370, one can think of holding on to Balrampur Chini. But other two counters which you suggested, that's EID Parry and Renuka, I will not really look at as of now.
All right, that's the view on the sugar space. Of course, we have a lot of queries coming in from the banking pack as well. Kalyan wants to know your thoughts on an IndusInd Bank. Of course, IndusInd Bank, day before yesterday, we saw a very sharp sell-off coming in yesterday. Some bit of rebound, 4%, smart rebound, so to say. But given the volatility in some of these private banking names, do you think one should ride the kind of moves that, we can see on the charts? Or do you think, one should just buy and wait it out for a couple of months for the margin picture to stabilize?
So specifically on IndusInd Bank, yesterday we initiated a buy. Now the only reason for me to buy was the trend. If I look at on the last 6 to 7 months, business is still positive. If someone understands technical, there is a trend line which is being made from the bottom of July and connecting the bottom of September. And yesterday, counter made the exact bottom at the same level. So that was the only reason for me to initiate the buy. Now, this counter just looks similar to the Angel One formation, which we discussed. A massive rally and a significant decline near to the previous bottom itself. Risk reward ratio is favorable. So if someone wants to initiate a fresh buy on IndusInd Bank, certainly one can consider the same. Now, the stop loss on this is going to be 1430. If the counter breaks the previous, just day before yesterday's bottom, that's around 1430, one should take an exit. But otherwise, I think the sideways consolidation from here with the positive bias is likely. The target to watch out on the charts will be around 1600. Keep trailing the stop loss. I think this is the best, in terms of risk reward ratio as of now.
All right, that's the view on IndusInd Bank. But a couple of queries trickling in on Geo Financial. Sai Reddy and Lokmanya Rampilla. On the charts, do you see a further uptick here? And what about a Bajaj Finance? Ahead of numbers, how should one really position themselves in this particular stock, Bajaj Finance?
See, generally the counter when reaches the previous high or the previous low, that particular level acts as a support and resistance. Same happened with Geo Financial. The extreme high was seen, which was all-time high near the date being 15th of Jan, and from there we saw the correction coming in. But trend, if you look at from the extreme low levels, is still positive. So one can hold on to this with the stop loss of around 236. I think the counter remaining about 236 can give again the positive. The rally might just continue for now. If I come to Bajaj Finance, then on Bajaj Finance, the formations are pretty much laggard, sideways consolidation, but counter is near to support. So with the stop loss of 7,000, one can hold on to it. If someone wants to initiate a fresh buy, I think I'll recommend a buy above 7125 with the stop loss of 7,000. That's 125 point stop loss. And on the higher side, one can expect the bounce till around 75.50. Again, the risk reward ratio is certainly favorable, but I'm just waiting for the momentum to emerge to initiate a buy on this counter.
All right, that's the view on Bajaj Finance. Risk reward certainly looks favorable at the current juncture. But before I come to your stock recommendations, Kunal, we keep getting queries on rail stocks. Of course, we've seen some of these stocks rally at breakneck speed, right? And you also already mentioned that, stocks that are in overbought zone also seem to be rallying in this market, right? So where do you see that top coming in for some of these rail stocks? Because, a lot of these queries come in on whether one should buy at these levels. Do you think risk reward is favorable there as well?
Certainly no, but now the problem is that if you're holding the position, why would you book just because the counters were down by 10%? And at the same time, can we initiate a fresh buy at the present level when the counters are at extremely overbought zone? So in both the cases, the answer is if you're already holding the position, trail your stop loss and hold the rally. I mean, this rally might just continue even going forward. But if you are not holding these counters, I would say stay away from these counters. There are many other pockets where the counters have just started its new journey. So we can, always look out for those favorable risk reward ratio. The counters which are at the peak will not really give us good entries. So no fresh entry at the present level, but if the counters are in your pocket, just certainly hold on with the trailing stop loss. I think as of now, in general, all the counters are near to the support itself. So 3 or 4% down from the present level can be a good support. Hold on to the counters. If those stop losses are triggered, just be happy and exit the positions, but don't think of buying at the present level. I will be conservative at this point in time.
All right, everyone who has a query on railway stocks, hope that addresses your queries. But I think we've come to the end of this query segment. But Kunal, what would you be recommending for viewers this morning? And secondly, we have a lot of these new investors or new generation that, that is tuning in on our programs, and they want to know that, if they want to make a fresh entry into the market right now, what would you advise them to buy? Do you think everything is at elevated levels, perhaps, wait for that dip to come in before getting in? Or do you see some pockets where these new investors or new traders can get into right now?
So I'll just quickly first share two recommendations. The first was certainly Tata Steel, which we have discussed. So another two are, the first is ABFRL, Aditya Birla Fashion. I think this counter has made the extreme bottom at around 229, and from there we saw a massive bounce. At the present level also, one can certainly buy Aditya Birla Fashion with the target of around 250 and the stop loss being 230. The second is IDBI Bank. We saw the recent run up in the counter, again, inverse head and shoulder breakout, and yesterday also it was in flavor. It closed pretty well near to those 84, 85 levels. So with the stop loss of 81, one can certainly initiate a buy on IDBI also with the target of 90. And now we come to that answering that query on whether we should initiate the fresh entries at the present level, being the fresher in the market. I would say there is no problem in buying and entering at this level, but I've seen those corrections of 2008 and 2015 and 2020 also. So one thing is very sure, that the flavor of the market, let's take an example of railway stocks, which are at the peak of the market. I would not really be keen to buy at that level, but the counters like IDBI, which are starting from the extreme low levels, and if we are seeing the consolidation breakout of almost 10 years, 11 years kind of, then yes, one can certainly initiate a buy. So be a little cautious and don't put all your money in the market as of now. Wait for some kind of correction where the favorable risk reward issue is available on most of the counters. One can certainly approach the market, but don't risk the entire capital at this juncture of the market, which is near to the peak itself.
All right, that's the view then. But with that, thanks a lot, Kunal, for taking out time and joining in this morning and sharing
My
your thoughts
pleasure.
with us. And we look forward to touching base with you sometime soon. But with that, we've come to the end of this edition of Morning Trade. Thanks a lot for tuning in, and thanks a lot for putting up with this voice of mine, which is kind of gone for a toss. But of course, you stay tuned. Don't go anywhere, because coming up next is Opening Bell.